This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound. If you recall, during yesterday's report, I mentioned two potential resistance areas that we might look for short trades to set up. The first was this long wick right here, and the second was the longer term resistance line, which is the white line that I'm pointing at right now. So during yesterday's session we had a bullish candle. Prices approached the high of this candle wick right here, right near the 86 figure. We're unable to penetrate or close above that area. So moving forward now, for aggressive shorter term traders, I would have a bearish bias again against the high of both this candle wick here and of yesterday's wick right there, which is right near that 86 figure. Again, if you're an aggressive trader, you might look for short trades now, placing your stop just a few pips above that 86 figure. Now for longer term traders, again, we might wait for prices to come up and test that longer term resistance line. In that case, we'd have a wider stop, maybe 50 pips or so, but again, we would have to wait for that trade to materialize. The next chart is the Aussie Kiwi, and if you recall during yesterday's report, I mentioned how we might have a bearish bias against the former support line, which now seems to be acting as resistance. I can zoom out here, give you a better view of that line. So moving forward now, the one thing that I would mention in terms of the bearish case, or the bullish case for that matter, is the potential for a double bottom, at least a short-term double bottom on the daily chart. So if you were short, I might take a portion of your profits at this area right near, or right now, or maybe down near that 124 figure. And if you're waiting for that short trade to set up, again, if you already are short, I would continue to hold the trade. I just might take some profits off the table. If you did not enter on the short side, what I might do now is wait for a close beneath this line right here. This is the previous fib level, so you can ignore, well, that blue line is the support line that I'm speaking about. So what we would do is wait for a close beneath that line before entry on the short side. So we would need another day here to confirm that trade. The next chart is the Pound Swiss. If you recall during yesterday's report, I was mentioning it was a low confidence trade idea, but we might have a slight bearish bias against the high of this candle wick right there, right near the 179 figure. We did have a very bearish candle during yesterday's session, a decline of over 200 pips. So maybe you got in on the short side. I did mention during the report, however, that we might wait for a more favorable risk-reward entry near that 179 figure. That did not occur. So moving forward now, what I would suggest, if you are short, I would continue to stay short, and if you have not entered on the short side, what I might do is similar to the Aussie Kiwi trade. We have this very long wick right here on this candle. I might wait for a close beneath that price level, which I believe is in the 74.50 area. Yeah, 74.58. So that's what I might look for over the next 24 to 48 hours. The last chart is the Euro Swiss. Not much has changed here. Still just waiting for prices to come up and test that longer term resistance line. If they do, we'd look to enter at the resistance line with a stop, maybe 50 to 75 pips above the resistance line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.